Thank you for the amazing introduction. Just like yesterday, you're making the crowd hot for us. This is great. Guys, thanks for joining after a night of exciting and probably tiring side events. We appreciate you being here so early, and I promise you it's worth it because what we're talking about is reaching the first billion crypto users. Why this is important, where we are right now, and what are the milestones that will help us get there is something we will discuss in the next 50 minutes. But before we get in there, I'd love for you guys to introduce yourselves, perhaps in order, and tell us one small thing. What was the first crypto you bought, and when was the first time you bought it? If you want, I can break the ice. I bought my first Bitcoin in 2017. It wasn't an entire Bitcoin, but I still haven't sold that little BTC. I'm still holding it in cold wallet. So, without further ado,
Yep. Hello, everybody. My name's Andrea. I run the capital team at the Solana Foundation. What that means in practice is that a lot of what I do is handle our grants program. And now we're giving a lot of thought to how can we work better with investors, how can we work better basically with any source of capital within the ecosystem. We just basically want to make sure that good projects, at least within our ecosystem, are funded quickly and with the right type of funding, whether that's from us or someone else. First crypto was Bitcoin. It was about 10 years ago. I'm a terrible trader. Well, I just don't sell, so I'm not a trader at all, I guess. So yeah, not a full Bitcoin either, but 10 years.
Hey guys, again, Michael Stroev, CEO at Venga. Venga is an app that takes innovations from the Web3 space and makes those innovations more accessible and easy to use for consumers. I have been professionally in the space since 2020. I have been personally in the space since 2016, bought my first Bitcoin then, sold it quite quickly, and probably have approximately 0.2 BTC somewhere on some wallet stuck somewhere that I can't recover. I think a lot of people are in the same boat, right?
Nice to meet you guys. I'm Damien. I'm the equity partner at Blockwall. We are a venture fund investing in tokens and equity within the Web3 space. We've been doing so for about 7 years now. We are a fully regulated German fund, which wasn't easy, as some of you might understand, to get that license going. But we're happy to support about 40 companies. We've been early investors in projects such as Solana, for example. We're part of the C round. And we've been very strong believers of the ecosystem ever since. Even though I personally bought Ethereum during the ICO, which was my very first wow moment. And then I sold it when it 10x'd, and I thought I was the biggest trader of all. Sadly, it 10x'd afterwards, and I just cried in despair.
Hi everyone, pleasure to be here. My name's Leeor Groen, and I'm a managing director at Spartan Group. Spartan Group's a leading digital asset management firm and investment banking group fully dedicated to Web3 and the technologies around it. We're based out of Asia. We have our offices in Singapore and Hong Kong, and really try to be a strategic partner to the industry. I'm based between Zurich and New York, and great to be here with you. We run a liquid hedge fund, 2 venture funds, been early backers of many projects in the ecosystem, an active M&A advisor working with founders on exits. So from first check-in all the way through to exits, we work with the best entrepreneurs in the space. Bought my first Bitcoin in 2016. Obviously, didn't buy enough at the time. It was a terrible UX experience, but I heard about it from friends. And I think that's really the topic here today in terms of how do we grow the industry, word of mouth, and how we've all gotten here so far. So really excited to be here. Thank you.
I'm around all stars here. Hi, everybody. So I'm Ko. I run Bit2Me, and it's one of the oldest, more prominent crypto digital asset service providers in Spain. We have an office here in Alicante, Argentina, and Abu Dhabi. And under the umbrella, we have multiple regulated companies such as an exchange broker custody solution, which is our consumer app, a launchpad for launching ICOs or now STOs as well. And we also are big into infrastructure, helping banks get into the game now that MiCA is coming. So we're tackling a lot of the non-crypto users right now and try to bring in 1 billion of these, the population into this space. I think it's the technology we all believe in and we all want this to succeed. So I'm excited to talk about that. It's Bitcoin for me as well, 2014.
Excellent. So from your replies, it's pretty evident that we're all from the Bitcoin class of at least 2015, 2016, well, 2017 in my case. But for the people who joined in the past two cycles, why the topic of the 1 billion is so important? Because we've actually crossed the 560 million mark this June, which means that we're halfway through to the billion mark, which means that basically 1 in every 13 people holds crypto. Now, I'll throw it over to you guys, and perhaps we should just go in order. Why is the 1 billion mark so significant, and why do we attach so much importance to this kind of psychological 1 billion number?
Yeah, I mean, I think to some degree, the number, like a lot of metrics, is an arbitrary one, but it sort of strikes this balance between being both like a wildly large number, right? Like a billion is something that only very few systems have, right? Only very few social media systems have. But also, like you mentioned, it's sort of somewhat within reach. And so it creates this goal that is both wild but also kind of attainable. And so the actual number itself may be less important, but it does give a goal for people to strive towards. And I think it's something that is doable within the next, couple years. And so, yeah, at least that's what it is for me.
Michael, what do you think? Why is 1 billion so important for us?
It's a really cool number. But realistically, I think it's because people compare it to the growth of the internet, right? When the internet reached 1 billion users, YouTube was launched. Facebook was launched in 2004. So I think people associated blockchain and that number with the fact that maybe once we reach that number, it was going to be mass adoption, and we're going to have products and services that are going to allow that mass adoption and allow that number of users that will have either formed before or will form after or at reaching that number. So I think it's just that association, and it's a cool number. Obviously, it's a huge milestone. For me, it's kind of been in my pitch for many, many years, hoping to aid the industry to reach that 1 billion is a good ambition for me, and I hope for everyone in the industry.
Maybe I'll jump in here with a little bit of a different take. I think realistically what the industry is about is network effects, right? And when we make the comparison to the internet, it wasn't the launch of YouTube or major consumer applications that we now interact with that made the internet. It's what that then enabled, the second, third, fourth order effects that were created. So nowadays, when we talk about content creation, advertising, the way in which brands, consumers, everyone is engaging and interacting with each other in a fundamentally different way that was never possible before. And I think, to all the ICO skeptics out there and people that make fun of our industry, which often there is very, very legitimate criticism, I think they underestimated the power and significance of a community-driven approach to technology and adoption. And what makes Bitcoin stand out across all of the technologies that have come is that it really has been bottom-up. It's been initiated by people in response to what was, at the time, the financial crisis, which created a lot of frustration in the world, a lot of economic impact, and as a result, there was a system that was designed and adopted as a result of people's desire to not be dependent and held captive to that. And if you play that out, the technology's grown and adoption has come. Projects like Solana have shown, the throughput and the technology scaling problem can be solved. It's really then, when you get to 1 billion, how many second, third, fourth order network effects can you realize and recognize? And I would argue that today, decentralized networks within crypto communities are the most exciting space in the world today for any consumer application. The distribution channels, the distribution power that you have with decentralized exchanges, DEXs, and all of the fun things happening in the deep Web3 world, I think that these are things that are only just getting started and will continue to see. So very excited about the 1 billion number. This is a people-first movement, and that's how it started, and excited to see that really hit that milestone and really just launch the rest of it into possibility.
I think I personally want to bring a bit of nuance to that magical number, because when you think about it, there's nothing magical in a number, right? When it comes to crypto users reaching 1 billion, I mean, it's not even crypto users, right? The question was about holders, so it's even a different topic. I think we have to be a bit rational here. Even though 1 billion seems like a big number, if people are just passively holding, cryptos in their wallet, you won't see much of a difference. The reason why this number was magical for the internet, as you outlined, is because there was a very high usage, driven by the people on the internet. This kind of so-called network effect. So, I think overall, as you know, we gather more and more users in the space. We need also to reflect upon, okay, where are we driving people towards, and what are those people actually doing, right? I think there's, again, more than 500, 600, according to the latest numbers, crypto holders. But what are those people actually doing on chain? Is there any meaningful activity that are, really, bringing this ecosystem to the next level? And are we taking, full custody of all of that? I'm not sure right now that's the case, and I think we've seen like great builders at this event and worldwide trying to actually make a meaningful solution out of crypto. And I think this is really where we need to push. The users will naturally come, right? It's not. I don't think it's about putting the number of users first, but it's rather putting the use case first, and then users will naturally come. The reason why internet was so widely adopted is because it was just convenient. And I think crypto, went through different phases of realization when it comes to, usage and use cases. And we're now only getting out of the woods and, realizing the full potential before having kind of exhausted all of the useless use case, sort of.
So fun fact, in 1999, only 3% of the world used the web. And that's where we are right now with Web3. Only 3% of the population. So at least with us, we look at it as a percentage of the population and not like an absolute number like 1 billion. So I'm really excited to talk about this panel. It's not about, the issue right now is not about technology. It's not, the technology's there. It's not about the, how we can build things. It's what we're building, what problems we're solving, what part of the world. It's different in Europe and in the US, where Bitcoin's more of a speculative asset, whereas when you go to emerging markets, it's actually a necessity to get out of their current problems, to put food on the table. So these are the different problems we're tackling as a company, since we have presence both in Latin America and Europe. So it's, I think we should ask ourselves better questions, and if we want to drive this forward.
That's a great perspective, and we've heard a lot of interesting answers here. One thing that some of you guys touched on is how Web3 is sort of correlated with this adoption curve of the internet. Now, for Bitcoin specifically, not for Web3, I believe we're at 4.7% of the world's adoption 15 years in. And when we look at the internet, 15 years into its development, we've seen a huge surge in users, and we've seen a huge surge of adoption. Now, Bitcoin has just passed its 15th birthday. Web3 is a little bit younger, but it's getting there. Two questions I guess I'd like you guys to answer. One is, do you see adoption accelerating in the next few years? And two, what are the use cases we really need to drive adoption forward? Because obviously, Michael, I believe you were the one who mentioned that this financial crisis brought us to Bitcoin, but we may need some more use cases to push forward to the first billion. And you guys can answer in any order for this one.
For me, again, it's the use cases are being built, but it's not just use cases. Again, let's take a step back. First of all, it's education. All right, education is still a blocker. People know Bitcoin, cool, ETFs. People know Ethereum, great, ETFs. People can buy that as an asset class. What else can you do, right? Crypto is just a small part of the blockchain industry. Then that's also a small part of the Web3 industry. I think the most important for us as an industry is to educate people what you can do, and that is obviously talking about the different use cases and the different products that are in the market, right? Specifically, even like going into RWAs. This has been on the market for a long time, and people were expecting to see a hype with tokenized funds, tokenized real estate, other tokenized asset classes. This has happened and has not happened, and again, a lot of people are still not aware that this even exists. So I guess for us and for me and for the whole industry, it's all about education, and then also what we're about in Venga, it's discoverability, right? It's allowing people to quickly and easily discover these things, right? Which right now takes time. I need to spend hours on crypto Twitter or anywhere researching stuff, and I don't have that time. I need to run a company. How can I do it? And I'm sure everyone can relate to this. So that's the biggest issue and biggest problem.
It's a very interesting point, and sorry, I'm going to steal your role for a second, but I would really like to extend on education, because I think this is one of the less talked topic in crypto, whereas I think it's one of the most important one, and I would very much like to understand your take on how do you think educating people could be actually made possible on that specific topic.
Showing them the different use cases, right? Bringing them more than just buy, sell, and swap. right? Bringing them more than just an exchange, right? Bringing them additional products focused on specific use cases, even like emerging markets, things like that, right? To show them, hey, you can do this. You can deposit funds here. You can send funds this way. You can invest in this. And again, different use cases. Everything is still being developed right now. That's the way to do it. And it's also through user experience. So it's not specifically just going, hey, educating people, right? It's building a product that is educating people through its use case. So it's good UX, good user experience, good UI, right? When you have that, people learn while using. So it's not just about like me giving a course, or a one-on-one, crypto talk, right? It's really building a product that is end-to-end, complete and good and great.
Yeah, I think it makes a lot of sense. And just to bounce back on one of the things you said, I think especially on the financial sector, we have seen crypto becoming very interesting for the consumer market. I just have, one example that comes to my mind, which is remittancy. We've seen a lot of, markets being hit super hard by inflation. Could be, I think Nigeria is one of them, where we have invested in the company doing that, where you essentially enable people to actually have instant settlements and along the chain being able to use stable coins for their daily use and daily life instead of having to endure hyperinflation environment. And I think those people are actually the ones leading the revolution to that end because it impacts their daily life, right? Whereas, even myself, right, I'm holding crypto, but I'm not doing much on a daily basis. These guys, they have the mean through crypto to actually, improve their life and make it, just a better environment. And I think, they are probably going to be the one leading the very next phase of the revolution when it comes to adoption in crypto.
Maybe just anecdotally, we do a lot of work educating politicians, for example, in the US at least. And the things that strike a chord are sort of what you mentioned, these like real world examples that go beyond buy, sort of sell, swap. And primarily right now, the two things that resonate the most are DePIN, very easy to explain, right? This is something that really wasn't possible before crypto, and it's bootstrapping physical networks through the community, right? So it's something like Helium, for example, or Hivemapper. So that's one bucket of things. And the other one, like you guys also mentioned, is payments, and specifically cross-border international payments using stablecoins. Super easy concept to understand, and we'll get to everything else. But I think you're right, like education has to start with something that is comprehensible and goes beyond just, hey, how can I buy and hold something and hope that it goes up? So
I think distribution's the key here. And with distribution to happen, we need regulatory frameworks to speed up. All right, so nobody educated us how to use ChatGPT. It just popped up from nowhere, came out of nowhere, and we started using it, and we started talking about AI and researching about it because we realized how much impact it has on our everyday life, right? So, and so we need distribution. We need the banks to get into the game. The Robinhood effect in the US is, I think, very interesting because all of a sudden you have millions of users who trust the Robinhood app. And if you see Bitcoin there instead of Tesla stock, then you automatically get curious that you're able to transact and buy that piece of asset. And so once the banks start rolling out their crypto offerings, I think that's going to be a big one because it's distribution, right? And it builds out from there on the consumer app perspective. On DePIN, that's really interesting too because it's like, you're saying really uses the potential of Web3 and the technology. But we need regulatory frameworks for every jurisdiction to allow that to go and get the network effect that Leeor was talking about. And so we need both distribution and regulatory frameworks in each jurisdiction to come. I like that we talked about stablecoins because that's one use case that's clearly something that does not even need education because all of a sudden you have access to a tokenized dollar, or at least a tokenized asset that's backed by the US dollar. That has changed the lives of hundreds of millions of people without even knowing it, right? Specifically in the emerging markets. And in the Philippines, for example, they just launched the Philippine PHPC stablecoin. That's going to be built on Solana. It was launched last week on Breakpoint. And that's really cool because as a Filipino, you send money and every $100 you send, $8 gets out of the table. But for the user now, through this new technology, they just see, oh, I'm getting charged 10 cents now. I'm just going to switch to that. I don't care what's behind the hood, under the hood. I like this better. And so there's a lot of human element that needs to be put into this industry also, and we need to talk about and build. Because at the end of the day, if you're building a consumer app, you got to build what consumers want. And if you're building something more on the infrastructure level, like deepen, then we have to constantly talk with regulators and have an open dialogue, because we're not going to build something and then they regulate it. We have to. I think that was before when this first happened, but now we have to have open dialogue with the incumbents and make this thing happen for real.
That's definitely a great perspective. And just regarding all this regulatory talk, I feel like what Ko said goes hand in hand with this educational discussion you guys had earlier. Because without proper education, we will definitely not have a proper regulatory framework. But I would actually take it a step back and say that while crypto education is important, I feel like general financial education is also lacking. From my perspective, I'm from Eastern Europe. I'm from Romania, which had the highest inflation rate in Europe. We're at 7.3. Super proud of that. And Bitcoin adoption is actually through the gutter. It's nobody really understands inflation. Nobody understands monetary debasement. And I feel like the example Ko gave with remittances. If people simply understood that they're losing, I think you said 8% of their money when they're sending a transfer to the Philippines, I feel like it would be much clearer why we need stable coins and why we need cryptocurrencies with lower transfers. Did you want to add something to that?
I'm going to add to that because I'm going to take it a step further. I think what's happened today is the normalization, especially within retail banking and the service provision that you have, let's say across Europe, North America, Australia, and parts of the world where you have advanced infrastructure. I mean, in Switzerland, retail customers are still paying banks monthly fees to store their money at a bank. So the basic service provision of preserving wealth is not only does a bank, and if people knew how banks are making money, they would be absolutely gobsmacked, right? They would immediately enforce a change to the system. One of their biggest successes is to make sure that no one really understands what the hell's going on, right? But a bank who takes your money, basically sells you mortgages, matches long-term supply and demand of credit, and makes money off that. You as a retail customer are a golden cash cow for a bank. And I think the issue where we are today in terms of when we talk about decentralized finance, how do we actually support the adoption of this, not just within the crypto echo chamber. I mean, most of us here turning up to an event, we understand that there's an opportunity in a technology here. I think for the technology to really make it and scale and be adopted by not just the 1 billion milestone, but really the world's 7 billion and thereafter, as however many we become, is to have that scalable infrastructure, which is permissionless, trustless, mechanism for you to store assets in a secure way. Now, the only way to do that, as far as most people are concerned, is under your bed at home or at a bank in a country where you're being ripped off. There is no other option. There's two options. And the reality is, and one of the reasons why we're so bullish on the opportunity set here is, there are many entrepreneurs in this industry who have built scalable, sophisticated technology which are able to replace that. And I think one of the challenges we've had in the industry is communicating the traction they've had. So, I mean, even in Europe, we have projects like SAFE. SAFE is securing over $100 billion, which, again, in the scheme of things is a drop in the ocean of how much assets are out there. But in terms of small regional banks in most European countries, this is larger than the deposit base of most banks in most countries. So we already have on-chain native decentralized banking solutions, which, again, my mum and dad could go on and use. They're not doing it today because of education, because of concerns, smart contract risks. We're not there yet, but the technology is there. And it's really now about how we get from where we are today, as we said, 15 years into the Bitcoin journey, to the next 15 years of the Bitcoin journey and the second, third, fourth network effect orders that have come thereafter, are people using SAFE for their basic, I want to deposit my money in a smart, secure way. Why the hell would I give that to a third party like a bank where I'm taking counterparty risk, not getting the security of my deposit, and they're making money on me? So none of those things make sense. And as soon as people start realizing that, and there's a secure alternative that they're aware of, they will change. And that's where I think projects like SAFE are going to be, and not an investor, not shilling my bags here, really just acknowledging credit where it's due for some of the leading tech infrastructure we're seeing being developed within the decentralized web.
That was awesome.
I completely agree. It's quite hard to build on such a comprehensive answer. But Just speaking of the network effects, I know we've talked about how this is a magical and a bit of a psychological number, but how soon do we get to the 1 billion? Will we see it before 2030, or not really? And what does it depend on? Is education right now what's mainly stopping us? Because we seem to have most of the use cases.
I think to be honest, as I already said, education, UX, UI, discoverability, compliance, right? So going a bit, switching to the compliance side of things, right? There's compliance for today's products, right? Regulation for today's products. Okay, fine. We're covered by that, so to speak. There's FASPs, there's MiCA that's coming, but then there's MiCA 2 that's going to be around the corner, right? Which is going to cover DeFi. And now I'm not even getting into all the future products and services that are going to get developed, which will require future compliance. So I'm very curious to see in which direction that moves. So the next, let's say, to get there, we also need compliance, future compliance, but this is a normal trajectory route to get from today to the 1 billion mark. My opinion, I think we're going to get to 1 billion before 2030, but it also depends on, again, how good the compliance, how quick the compliance advances, how quick the compliance catches up to all the new products, and the political situations in all the key countries in Europe and the US, specifically US, that's affecting the US regulatory landscape, et cetera, et cetera.
I mean, according to your presentation, you're supposed to onboard the next 500 million, so.
That's what we're trying to do, of course.
Next week, yeah.
No, I mean, I'm not going to add much on that, but I think, the point which was touched before was very relevant. Distribution is key, and you don't get, to onboard more users in the next, 5 years than we did in the last 15 without having a proper distribution. The real question is, though, like, do you consider people holding ETF, crypto holders or crypto users? Having distribution in the form of really buying the asset, the underlying asset, is really what needs to be done. However, we're seeing already a move from banks who, of course, want their share of the cake, and that's normal, right? To tokenize those things, put them in ETFs, and just subsidize crypto by standard financial products that we've been buying for years, and just embedding crypto in this. So I think there's a bit of a shift here in the industry where we really have to be careful, right? Between the real crypto world that we all here used to know, and the one that is coming with institutions wanting their fair share of the market as well. Because distribution here will largely shift towards embedded products that those banks are going to cook, or those institutions are going to cook, versus you going on an exchange or going on a platform which sells you the asset directly. And I think it all boils down then again to education here. Don't trust, right? Verify. And I think that's very true also for not going in a way which inevitably we're going to end up in the same scenario as today.
Yeah, I think 1 billion holders, doable. 1 billion users, super hard to predict. And I think that difference is important because right now, just buying and holding something is doable. In the US, at least, Coinbase, you do it, you don't have to it's a Web 2 experience. But using crypto is very, very different. UX sucks right now. People, if they want to self-custody, people don't want to learn or have to remember, 7,500 words in order to store $100 in their ledger or whatever it is. And so I think that, to me, education, sure, agreed completely, but it's the user experience, the sort of effectively masking the complexity of crypto that needs to change if we're going to actually get users who are interacting with the blockchain regularly.
If I can actually ask a question to the panel on that. So for the 1 billion user mark, do you think that consumers will go full decentralized Web3 seed phrase experience, or will this be a mix between Web3 and Web 2.5? Or let's just call it Web 2.5. I asked this specifically because, again, I'm from C5, we're a centralized app, right? And specifically, you see companies like Ledger that are moving not away, but offering side projects, let's say, processes, right, for people to not need to store their seed phrases and things like that. So again, once we reach that 1 billion mark, will this be full Web3 decentralized, or will this be a mix? What's your opinions?
I think you know the answer, right? I mean, I think it would. I mean, it would be wonderful if people, can, finally use a seed phrase, understand how to use a wallet and all. But I think it's also very inconvenient at some point, right? So that's why, Coinbase owns custody or Binance custody is what a lot of people are using. I think Coinbase has 100 million users, right? I mean, it's a fair share of the market. And there's a reason behind that. It's Web3 is a very hostile environment. We're seeing more and more account abstraction stuff being developed where people don't have to care about that and they can just use like centralized services such as Face ID. And when you think about it, it's a bit of bad news. But still, I think UX matters, and I think it's been said many times on this panel. So to answer your specific questions, I don't think we can reach that billion user with like only people that know how to use and handle a seed phrase and a wallet. It doesn't seem possible because it's like if I would ask you to run the database on your website yourself and code the whole backend, right? You might be like a tech savvy people, but I personally don't understand I don't know how to code. So I think it's the very same thing here, and people don't want to. Probably.
I think, there's two aspects of this, because I do think that some of the applications that we're talking about, specifically around stablecoin and payments, which again, retail, we understand because we go and pay for things multiple times a day with a credit card, debit card, whatever infrastructure you're using. Businesses, you do the same thing. They have suppliers, accounts receivables, accounts payables, they process transactions. Everyone understands that. Now, what percentage of that is contributing to the Web3 world and what we're talking about here in terms of adoption? Open for debate. But when I look at this in terms of what is success for the industry, I don't consider it just the evolution versus the internet. You look at things like how did cloud computing and cloud storage really take shape and take form? Cloud storage was the idea of splitting it across multiple devices was invented in the 70s. We only got Google Drive, Dropbox, Amazon AWS hosting infrastructure. Those applications only came in the 2000s. That took 30 years. So I think if we were sitting in conferences in 1980s talking about what would be the adoption cycle for everyone to be de facto storing their data, not on a single PC or device, but on the web, you would have had a very different answer, like, oh, a billion users, that's crazy, we would never have this. But then at some point you're like, well, why the hell would I store it on my PC alone? What about backup? What about all of the things that are important to me as a user? Not because that's how it's always been done and that's how companies are making money by selling me larger storage devices, but what actually makes sense. And I think we're seeing a similar thing here, right? Because when you look at the evolution of how storage of money works, right? We've gone from cash to versions of e-money, right? You sits in a bank. It's not your money when it's at the bank. That just doesn't make sense. You're paying with your Visa processing network. Why is the Visa processing network not the same counterparty as my bank where the money's sitting? And the whole idea of on-chain assets, digital money, digital value, is that it is fully online, transparent, and traceable. And that is from every metric possible, other than committing illicit activity and anonymous transactions for predominantly illicit activity. It's the better product. And most people want to do good. They want to do the right thing. Of course, there are applications and use cases to do the wrong thing, and I'm not pretending that doesn't exist in our industry. But most people are doing the right thing. And at some point in the not too distant future, and I think it will be much before 2030, we will have that inflection point where paying with on-chain digital assets will be much easier and cost-effective than going through any version of what we're calling Web 2 payment rails, SWIFT networks, Visa processing networks, because the money's already on-chain, it's cheaper to transact, and it's much more transparent and visible, so people have the incentive to push this on their users. Now, that hasn't conceptually happened yet because regulations, banks don't understand what we're doing here. There's too much fraudulent activity happening in the industry, so it takes longer, right? Every step forward, we take a step back as well. And that's frustrating for us in the industry trying to push this forward in the right way. But ultimately, at some point, people don't want cash anymore. And the same way I don't want cash, people don't want e-money that they don't understand who's holding it, what it is, and is it mine, right? People want to know that it's my money and it's secure and I can get it whenever I need it. And that's where we're going.
I agree. Yeah, it's just very, very solid points. I think to summarize that and add my take on it is two main things. Like with our industry, we talk a lot about adoption, and then we talk a lot about how it can be better for this and that for retail users, for the banking sector. I actually like how the AI sectors talks. They go, oh, how is AI going to change the way we do customer support? How does AI change the way we're going to do design? and all these things. So if we go more specific on an industry and niche and how we can actually use technology to save either save jobs or save just be more efficient in general, we'll get to the bottom of this question pretty faster. And then the second part is what Leeor was saying, and for me the summary is crypto is programmable money, and when you can program money, it's a game changer. Whether that's in decentralized infrastructure, decentralized finance, and Web3 gaming, hopefully by 2030, that's just going to be called infrastructure, gaming, and finance, right? Because the fact that you can program money is just incredible. And now the issues will lie more in incentive design, especially for Web3 gaming, right? We have to do a better job there. But we're on the right track. 2030, I think, is feasible. We'll see. I think all of us here are doing impact assessments on what Mika will do by next year. We have no idea. Mika 1.0, Mika 2.0, we'll see, right? But it's a step to the right direction. The U.S. has been clear now. Whoever wins the presidency will be supporting our industry. That's what they promised, at least. So we'll see. But yeah, just going back to what Leeor was saying, programmable money is a game changer, and that's why we're all here, because there's so many use cases you can do with that, where you can both send and own, really, said asset.
Just to quickly circle back to Michael's question, which was a great question. Vitalik Buterin had a speech at Token 2049, which basically kind of answered your question, which is that we have to be careful to maintain decentralization without sacrificing practicality, or maintain practicality without sacrificing decentralization. I think what he ended his speech was that we have to take both pills. We need practical solutions, because obviously for 90% of the people, seed phrases won't work, MetaMask won't work, paying for gas fees and so on just won't work. But we also need practical solutions that are easy to use and that don't really deter the mainstream investors. Now, one thing that Ko also touched on, and quite a lot of you, is actually this upcoming MiCA bill, which I'd really love to get your opinion on, because I feel like it's at a critical moment. Most of the MiCA 1.0 is going to be implemented for crypto service providers at the end of this year in December. Now, as you guys also noted, that's not MiCA 2.0, which will bring a lot more changes. But what's interesting is, for the first time, the European Union is coming out with a comprehensive regulatory framework for crypto, whereas the US, the largest global economy, is quite lagging behind. And why this is key is because we also have the elections coming up. So how do you guys see the regulatory front change like in the next year? Because elections will obviously be a hot topic, especially for crypto regulations. But I feel like jurisdictions are kind of being pressed by MiCA as well to innovate and kind of attract more companies. So how do you see the global regulatory field playing, say, after the elections and after MiCA 1.0? I'll take anyone who wants to start. I don't want to put anyone on the spot here.
So it's a tough one, right? I'm going to try to give you like an honest opinion. Just like jumping back on the first question, which is, like essentially, is regulation driving adoption? And I think you can ask yourself this question two ways, right? I mean, does regulation drive adoption, or adoption drives regulation? I think there's one case which we've seen is true, is that regulation drives liquidity in the market, because a lot of the people that have a lot of cash at hands, and I'm thinking about institutional, for example, have to comply with a set of rules, right, which is set by regulators locally, and those liquidity, inputs can't come to the market if there's no regulation in place. So I think on that end, most of us, or at least financial players in the industry, see that as a good eye, right? Of course, you have to make assumptions that regulators also understand the market in a way which is not going to be harmful for the future. In the case of MiCA, I don't think it's been the case always. I think you rightfully pointed out that we don't really know how this is going to impact us yet. We have some sort of ideas, because some points have been heavily debated already, and some lobbies have formed already at European level to kind of fight some of the things that are in MiCA. And I think I can just mention one thing which shocked me a little bit, is that stablecoin cannot bear yield, for example, which is one of the MiCA most controversial resolution, which is actually enforced very soon. So I would say, just to sum things up here, that for sure regulation is going to drive liquidity, but there's a lot of unknowns yet for us on how this is going to be operated operationally for all of the crypto companies out there, and how hard is it going to be to comply. So I think there's eventually going to be a period where we will see things change slightly, and MiCA will adapt probably, because lobbies will be, will grow stronger in front of the regulation. So I'd say it's a very much work in progress here. It's too early to say what is going to be the definite impact of that type of regulation. But of course, all of us will be involved in that.
So I'm an optimist. So I think with MiCA happening, it's forcing the rest of the other countries to self-regulate. The European Union does trade with a lot of huge market. It's a huge market for a lot of countries, and so that will mean these countries have to self-regulate. In the UAE, it's basically almost a very similar framework. In the UK with the FCA as well. When the US does it, I don't see it. I don't know if that's going to be that different. We're given the amount of business the US does with the EU and the UK. So on the financial sector side, I think it'll be pretty clear on CeFi, because at the end of the day, it's just an adoption of MiFID, and stablecoin. I think now is what, e-money, considered e-money now. And so we're getting there. 2.0, when DeFi comes in, will be a lot more interesting. A lot more heads will butt. But by then, like you correctly pointed out, regulation brings liquidity. And liquidity brings in huge incentive to make things work. And so it's going to be a very, it's going to be a step-by-step process, but I truly do believe we're headed to the right direction.
I think I can also add, but if we look at, let's say, presidential situation right now, we must not forget that there's a lot of, let's say, power gain based on the decision, that each potential candidate posts forward. The US today, full disclosure, I'm not from the US, right? But I've been following the scene very closely because it's been affecting Europe and everyone for years now. The US has not released let's say, any concrete regulation in the past years, right? This has not happened. The SEC has just been up and down, security, not security. Thank God we got the Ethereum ETF. But what next? Trump has obviously said, yes, pro-crypto. Kamala, I don't know, has Kamala put out any policy to clearly say what the regulation is going to be about, what her stance is on crypto? I don't think she has. So there's really a lot of, let's say, a question about power, it's a question about politics, and that's obviously influencing US world. But big question here is, I'm curious to see how this will influence actually markets across the world. Does it really influence to the extent that we all think it influences? That it is always, let's say, a test, right? We'll have to see.
I will say not super surprising that the US hasn't done anything. This is generally the case with a lot of sort of especially financial regulation. I don't know, I worked at a company called Square before joining crypto, and we saw the chip and pin and stuff like that, and NFC payments happen in Europe way before the US. To some degree, leading is a risk they cannot take. So not super surprised. I also would be very skeptical of anything said during the election period by either side. People say what they need to say to try to win an election. But the fact that both sides are to some degree signaling positively, I think is a good sign for the whole industry. So also an optimist, but skeptical optimist at this point.
I feel like you've touched on a very important part here, which is taking every political promise with a pinch of salt. Because actually, we've just seen that Donald Trump actually promised to launch a crypto platform on September 16. And during the supposed launch date, there was basically no talk about the crypto platform besides a potential governance token. So as you say, once they get elected, it's not quite sure that they'll deliver the type of regulation they promised. Ko, did you want to add something to that?
No, I was going to add to Andreas. So remember that the US, the reason why American companies are so great at going from 0 to 1 and disrupting industries is because they launch and then they regulate after. While in the EU, we like to regulate first and then we'll do something after.
Maybe do something after.
Yeah, maybe. So it's a dynamic. So not surprising, but again, yeah, optimist.
I also feel like we have to touch on one more thing in the US, which is the approval of the first Bitcoin and Ether ETF, because even though the US did not have a comprehensive regulatory framework yet, I feel like the ETFs were a huge, huge regulatory nod. And after the Ether ETFs, we're actually hearing market rumors that we'll have a Solana ETF next. I won't ask you, I know you can't comment on this, I know you're not a securities regulator, but do you guys also feel like the ETF was sort of the US's way to say, hey, crypto is here to stay, even though regulation is going to take more time?
I mean, the US stance, on crypto has always been somewhat mixed, right? So I think we've seen good things and we've seen also terrible things, of course. DTF, I think, is just the beginning for them to really kind of get their hands onto it, start, to regulate at their own pace before they can do any more major change within the regulation itself. Like this whole ETF topic is very interesting, but when you look at net inflows on the Ethereum ETF, which was the latest release, it's actually pretty flat at the moment. So I wouldn't be too excited that we rush onto like, hey, yes, let's create an ETF for every single crypto asset out there, because I don't think timing is still very right. It takes a lot of time for adoption of this product to really take root in people's minds. So I think we shouldn't rush things here and take it very step by step. Bitcoin was the first good sign for the industry. Let's consolidate on that and make things better afterwards, rather than rushing to every single crypto asset. But this is something we really like to do, right? In Web3, it's like, hey, see, it works. And we all rush to it. But let's take it step by step and probably think a bit more rationally here.
There was no way for institutional investors in the US to own Bitcoin directly. And so the equitization of tokens was the way to do it. And so I think it's actually smart. And we in the EU we kind of lost that train. But it's good. It's clearly they recognize that this is an asset that's here to stay, and digital assets in general is a growing space. And if there's no regulation to own said asset, then let's work with what we have, and that's the securities or the ETFs and the equitization of these tokens, which is kind of the reverse of what we want, but it's a net positive.
Guys, we're almost out of time, so I'll throw a last quick question at you. It's really a 20-30-second answer. I'm curious for the next year, speaking about adoption, what is your biggest concern about the crypto industry? And I'll start personally. I'm very concerned that we'll see another Terra Luna-like meltdown. I don't want to name any protocols. I don't want to name any categories. But with building yield generating layers on top of yield generating layers, I'm very concerned that we'll see another collapse. What are your concerns, guys?
I think that's right. I think 2-second answer is probably just lack of regulation. Yeah.
Michael, what about you?
I'm just going to say it's probably going to be the political situation affecting the market, really. Even though we don't know, we don't know how, let's say, how strongly this will push the market, how strongly this will affect the market. That's, I think, the single biggest thing I'm worried about right now.
I'm going to be controversial, but I'm going to say meme coins.
Yeah, I think becoming a victim of its own success. So some people made too much money. Everyone else tried to chase that and expected that, didn't make that. And it's basically pushed out the adoption cycle easily 5-10 years, in my opinion, because otherwise we'd be much further along the journey already.
Yeah, it's the same. We've survived so many cycles already. Wars, all these things. It's very unfortunate, but we're still here. And I agree with what Leeor is saying. It's not a question of if we're going to get there or if something's a bad actor's going to pull us down again. It's just going to slow us down, but that's it.
That's a great perspective to end this panel on. Gentlemen, thank you for all your insights. Ladies and gentlemen, please give it up for our panelists.